It is no longer news that Tesla has joined the list of billion-dollar companies in the United States. With a stronger than expected third quarter report, Tesla seems to be doing alright, despite the challenges weighing down the automotive industry. Tesla is one of the most actively traded stocks in the market. It is also one of the most expensive by various measures. However, the company's stock has for years been a battleground on Wall Street as one of the most bet against names in stocks. And this is why we ask, is it overvalued? Or is its incredible valuation justifiable? Tesla is unarguably the most valuable automaker with its market capitalization of currently around $630 billion, ranking it at number 6 among companies on the US stock exchange and making it worth almost 8 times General Motors and nearly 13 times Ford. But if it ranks higher than its competition, why are people still skeptical about it being overvalued? Well, looking at the results from last quarter, Q3, Tesla's revenue rose by 57% year over year to about $13.7 billion versus the estimated put out by Forbes at $13.5 billion. In the Q3 report of 2021, Tesla sold a record 241,300 vehicles, giving them a substantial increase of 20% and a year-over-year increase of almost 73%. Tesla seems to be doing alright, since the third quarter results were driven by strong demand for its mass-market Model Y and 3 vehicles. A company as huge as Tesla is expected to expand and make more profits. And this was achieved with the opening of the Shanghai Gigafactory, which now produces more cars than Tesla's Fremont, California plant. We continue to see Tesla's margin rising higher steadily. In Q3, Tesla's automotive gross margin rose to 28.8%, compared to 25.8% in Q2 and 23.7% last year. Currently, Tesla's gross margins are well ahead of the broader auto industry average margins of under 10%. And according to Forbes, Tesla has the scope to rise to a bit more in the long run. This will be due to the increase in sales of Tesla's refreshed Model S and X luxury vehicles and also by higher software sales. As predicted by Forbes, Tesla's revenue is expected to rise by about 13% on a sequential basis. Tesla is maximizing its strength by focusing on its mass-market vehicles, the Model 3 and Y. But the company has also focused on increasing production of its premium vehicles after pausing production for a part of Q2 to make way for upgraded models. However, with a company like Tesla, stocks and shares are bound to increase, and that is why questions like, is Tesla overvalued, are being asked. One major reason why Tesla is valued so much higher than its peers is growth. Tesla increased its sales by 45% last year, and Wall Street analysts predict another 55% increase this year, compared to General Motors, whose sales rose just 22% last year, while Ford's sales actually shrank by 10%. If Tesla is overtaking its competition on all fronts, should it still be a shock that its stocks are so high? In our opinion, they are allowed to be overvalued as long as they can put their money where their mouth is. Another factor that has helped Tesla increase its stock value is its strong online sales model. As much as this may create a potential risk in the future, this could give them the leverage to get in front of a lot more customers very quickly. One huge risk that has threatened Tesla's stock value is the self-driving or autopilot technology. This is one of the most powerful trends in the auto market. However, this outstanding feature has brought the company under intense scrutiny. Recently, the National Highway Traffic Safety and Administration began looking into 11 cases of collisions of Tesla vehicles with parked vehicles. Due to the news, Tesla's stock dropped by about 4%. So what does it mean for Tesla's autopilot technology? According to Forbes, there is data that indicates that Tesla's driver assistance systems actually make its cars safer. Based on Tesla's vehicle safety reports, it registered 1 accident for every 4 million miles driven without autopilot, compared to 1 accident for every 2 million miles driven without autopilot. Based on Tesla's vehicle safety reports, it registered 1 accident for every 4 million driven with autopilot engaged, compared to 1 accident for every 2 million miles driven without autopilot. But regardless of Tesla's reassuring data, this is one aspect that it might have to rethink its current marketing strategy. Because as appealing as it is to make customers think that human oversight of the vehicle may be unnecessary, this is an area that regulators would likely disagree with and force the company to make changes about. And this is a serious threat to Tesla's stock if not handled properly. However, in an amazing attempt at bouncing back, sales of Tesla's self-driving software appear to be growing nicely, despite news reports of crashes in recent years. Tesla has since raised the price for the software and launched a new $200 subscription of the software, reflecting its rising demand and capabilities. You might ask, what does Tesla's CEO have to say regarding its stock value? In an interview with Kara Swisher for a New York Times podcast, Tesla CEO Elon Musk affirms that Tesla's stocks have already risen more than 400% this year, and he asserts that Tesla will be worth more in 5 years. According to Musk, some critical mass of the market has concluded that Tesla will win, I guess. I've gone on record already saying the stock prices have been high, and that was well before the current level. But also, if you ask me, do I think Tesla will be worth more than this in 5 years? I think the answer is yes. In a wide-ranging interview in May, Musk assures investors that Tesla at this point is not in mortal danger as it was 3 years ago. He added that the thing that Tesla has been able to achieve is to get to volume manufacturing and have sustainable positive free cash flow. From a car standpoint, that is the real achievement of Tesla. Musk shares that Tesla should be measured by how many years it accelerates the advent of sustainable energy. If you look at all of Tesla's achievements, you can understand why its stocks are high, and it can help you decide if you want to invest or not. As we come to the end of this video, we can ask the question again. Is Tesla overvalued? The answer is yes, but it's justified. The answer is also yes if you look into Tesla's most important metric, which is the time horizon of focus. Depending on this, Tesla's value might still be small. But that's what we have to say. What do you guys think? We'd love to hear it in the comments section down below. For more videos like this, please be sure to hit the like button, subscribe to the channel if you haven't already, and turn on the bell notification so you never miss an upload.